What if we told you that one simple data signal beat the S&P 500 by more than 900% last year, and that you can see the signal before the move happens, not on a chart, not in the news, but inside the options market, where real money is placed? That's because the options market aggregates the opinions and the money of thousands of traders who are already positioning for what they believe will happen next. When you analyze that activity, you can often see extreme or unusual trends forming before they appear in the news or on the price chart. Later in this video, we'll show you exactly how we tested that and which version of the signal performed best. Today, you'll see how to read the market using Option Samurai's open interest report and different ways you can trade it based on 1 year of day-by-day backtest. First of all, you should know that open interest is the number of option contracts that are still open, not traded today, but still active. And that's the key. It shows where traders already have money on the line. We're talking about real positions with real risk and real intent. Our open interest report turns that data into a daily chart, so you can instantly see where the trading pressure is building. Typically, traders spread their option positions evenly around the current stock price. But when that balance breaks and you see a big buildup of contracts far from where the stock is trading, it can signal that something is about to shift in the market. Before we show you the strategies, we needed to answer one big question. Does the open interest signal actually work? So we ran a 1-year day-by-day backtest, taking the data straight from our daily reports, with no manual adjustments and no cherry picking. The goal was simple: to see if the options market positioning alone could predict future stock moves better than a passive buy and hold approach. And as you'll see next, the results were surprising. In fact, let's talk about the core idea we decided to backtest: the open interest center. Think of it as the gravitational point of the options market, the level around which all the positioning revolves. The more open interest there is, and the closer we get to expiration, the stronger that gravity becomes. When the stock trades below that point, there's usually buying pressure pulling it upward, like gravity drawing price toward equilibrium. When it trades above, that same force flips. Sellers step in, pushing it back down. But just like in physics, gravity isn't absolute. Sometimes the market can reach escape velocity, which in our case can be a strong trend, breaking news, or a highly distributed open interest structure that can let price move freely beyond that center, at least for a while. Still, keep this mental picture in mind. Price orbiting around the open interest center, occasionally breaking free, but always feeling its pull. Because the market's gravity concept is the foundation for everything that follows. This is our open interest report, the daily snapshot of where options traders are positioned across the market. On the first page, you'll see the top 3 bullish and top 3 bearish tickers, which are the most extreme positioning of the day. Below that, you can explore all the other stocks we track, so you can analyze the ones you're interested in. The idea is simple. The farther the open interest center is from the current price, the stronger the signal. That's where traders' positioning and stock price are most out of sync, and where movement is most likely to happen. You'll notice some noise from day to day, but the key is to focus on the extremes. Those are where the strongest signals live. Let's start with the simplest strategy you can use to trade our report: the raw signal. Each day, we take the top 3 bullish and bottom 3 bearish tickers from the open interest report. Then we go long on the bullish ones, short on the bearish ones, and hold each trade for 20 trading days. There are no filters, no indicators, just the pure positioning data from the options market. We ran a 1-year backtest, and even in this basic form, the strategy showed a clear edge compared to a simple buy and hold approach. That means the signal alone, without any technical or market filters, already captures meaningful information about future price direction. However, notice that you would have needed over 200 trades to get to a very nice return, which may be something hard to do for retail traders. Apart from the high number of trades, notice that this is not a strategy for the faint-hearted. The raw open interest signal can be noisy. Every day, you'll get a top 3 bullish and bottom 3 bearish list. But remember, those rankings are relative. There are always 3 on each side, even if the day isn't showing true extremes. This is why you'll find yourself opening and closing so many trades with this approach. Some tickers will be in the top groups of the report for a few days. Others rotate quickly, and not all of them work out. In our backtest, there were clear periods where performance dipped, short losing streaks that show how active and volatile this signal can be. It still has an edge, but without filters, it can feel inconsistent from one week to the next. So, we added filters to our backtest to keep the signal, but remove the noise. That's exactly what we set out to fix, and the results may surprise you. So, for the first filter, we told ourselves, what if we looked at the stock itself? What if we only went long when the options data was bullish and the stock looked ready to bounce, and short when the options were bearish and the stock looked ready to pull back? Wouldn't that make the signal cleaner and maybe more profitable? That's exactly what we tested in our second strategy. We combined the open interest signal with a simple stock level indicator, the RSI 14, to measure whether the stock was oversold or overbought. When the RSI was below 30, we only took the bullish signals. And when the indicator was above 70, we only took the bearish ones. Of course, the RSI is just one example. You can use momentum, moving averages, or any other technical tool that fits your style. The idea is the same. Add a stock behavior filter that removes noise, keeps the strong setups, and improves consistency. And it worked. Fewer trades, smoother performance, and a curve that still outperformed the market, but with lower volatility. In fact, the curve became much smoother. The swings were smaller, the equity line steadier. And even though the total return decreased, the number of trades dropped by more than half for a return above 600%. That's the power of filtering. Less noise, more precision. We've just seen how a stock-based filter like the RSI can help clean up the signal. But what if we took a step back and looked at the entire market? Not the individual stock, but the bigger picture. This time, we're filtering the open interest report using the market regime. Basically, the market's overall mood. Why? Because even if a single stock shows bullish positioning, it's much harder for it to go up if the whole market is under pressure. And the opposite is true too. In a strong bull market, bearish setups tend to fail more often. So, by aligning the signal with the overall trend, we're simply trading with the tide, not against it. To capture that trend, we use the 50-day moving average of SPY, a simple way to separate bullish from bearish phases. When SPY trades above the 50-day MA, we only take long trades from the open interest report. When it's below, we only take short setups. That single change removes a lot of the choppy trades that fight the market's direction, and it makes the strategy calmer, steadier, and much more consistent. And if you've enjoyed this kind of research, we've got more deep dives coming, including one on implied volatility and how it shapes future price moves. So if you want to stay ahead of those releases, leave a like, subscribe, and turn on notifications. That way, you won't miss the next test we run. So far, we've filtered the open interest report by stock behavior and by market trend. Now, let's focus on something deeper, conviction. This strategy looks at total open interest, meaning how much money and activity there really is behind a trade. We only take setups where total open interest is above a certain threshold. In our backtest, that was above 500,000 contracts. When you filter for total open interest, you're essentially following where institutions are active, where real money is concentrated. These are the trades that matter most. When thousands of contracts pile up on the same strikes, it's not random. It's positioning from players who can move markets. That concentration creates pressure, which often pulls prices toward those levels as the positions are managed or hedged. And here's what's interesting. Once again, when we applied this filter, the number of trades dropped sharply, but profits did not decrease that much. In fact, they held up surprisingly well, meaning we filtered out the noise and kept the quality. So, now we're trading fewer setups, but the ones we take come with stronger conviction and cleaner performance. Okay, let's put everything side by side. Here you can see how each version of the strategy performs, from the raw open interest signal to the more selective filtered approaches. Each filter adds context. The RSI gives you a read on individual stock behavior. The SPY's moving average aligns your trades with the market trend, and the total open interest filter focuses only where the big players are active. So, every setup tells a slightly different story. Your choice depends on whether you prefer more activity or higher precision. Which one would you trade? Are you more of a high precision trader, or do you prefer more frequent signals? Let us know in the comments. Just to wrap it up, we can hear you think, which filter works best? Our opinion is that the total open interest filter gives the most consistent edge. When we said at the beginning that you can often see the next move before it happens, this is what we meant. It produces fewer trades, but each one comes with stronger conviction, backed by real size and institutional flow. Of course, there's no single perfect version. Also, you can easily combine filters to come up with your own strategy. For example, you could choose to only take trades where total open interest is high and RSI confirms the setup. Or you can use your own favorite indicator when trading. The bottom line is that the open interest report gives you an edge, and you can adapt these filters to your own style, time frame, and strategy. Think of the open interest report as a core signal, and these filters as tools to fine-tune it, so you can trade with clarity and confidence. If you want to see the full backtest and all the details behind these results, you can check out the complete article on our blog. We break down each strategy, show performance charts, and explain every filter in depth, so you can explore how to apply it to your own trading. The open interest report gives you a view most traders never see, the real positioning behind every move. Use it as a raw signal, add filters for precision, or make it part of your own setup. Either way, you'll get a clearer sense of where the market's pressure is building before the rest of the crowd reacts. At Option Samurai, we scan millions of options daily to bring you this data in a clear, actionable way. Start your 14-day free trial today and see where the real money is positioned before the next move happens. And if you want to learn more about how to trade options with us, do not hesitate to check out this additional video.